central bank as the official managers of the exchange value of the naira. So, and that is why they will always watch it. So, which is also why, as of today, it is not any worry to the central bank. But where this is showing is the other side, because I mentioned two things. The other side is the external reserves. Now, external reserves have been going down.
Going down. Yeah.
And you notice now the reporting, central bank has also changed the reporting mode.
I think every 2 days
they used to report it on a daily basis. This is the figure. But now what central bank reports is the moving average.
Okay.
So the figure you see now is the 30-day average, which means if historically the figure was higher than what we are looking at now, the higher figures historically will influence the average you are presenting to the public today. So the average we are looking at today, which is what the central bank publicizes, is not a reflection of the actual position today. Okay? But in my own position as an analyst, my counsel to central bank will be that, look, forget about the moving average. Put the actual figure there, and it can be explained anyway. Because if you must defend the naira, then you can explain why external reserves are dropping. Vis-a-vis the fact that we are not selling more than we are importing.
So what we have being reported now at 47.07, that's as at July 12th.
That's right.
That shouldn't be, that's an average
It's a 30-day average. 30-day average. So every day that figure is reported now, it is just taking today's figure, dropping the last figure, and then keeping within the 30-day figure that we generate the average from. So it's a moving average. But that will be useful to central bank in informing us up until the external reserves begin to grow. Because when it now begins to grow, they will find that the average will be less than the actual.
Okay.
So which is why, in my own taking, they should just report the actual and give us the opportunity to measure how many months of our import bills those reserves can pay. That's another aspect to looking at exchange rate management. Okay? So now, having done that, we now ask ourselves, going forward, and that is what is causing this premium we talked about. Because the issue about management is not today or the history, it's about expectations. So what do we expect to happen to the exchange rate? Can the central bank sustain it? Then whoever is analyzing and interpreting will look at the external reserves and say, okay, they can sustain this for this number of months. And then the person will also look at what Nigeria realizes as inflows vis-a-vis the outflows. So you can answer, yes, they have capacity to defend the naira. But once there's a doubt on that capacity of the central bank to defend the naira, more people will want to buy. So demand will grow for it. And as demand grows, pressure of demand will come on the official market. Then, of course, in the alternatives, people will also go there. So and that is what will drive either central bank having to devalue the naira or having to deal with the premium, which is the difference.
All right. Now let's look at the interest rate.
Right.
Well, going by the monetary policy rate of the central bank, since 2011, it's been at 12%.
Yeah.
Now, where does that leave us, really?
Well, for me, as an analyst, it is more of what does that rate represent. Now, the MPR is a signal rate, and that's why it is called a policy rate. Being a signal, it means whenever you change it, it doesn't matter whether you change it upwards or downwards. What matters is the direction that it is signaling to the commercial banks to take down interest rates. So if it remains fixed, then the message you are passing to them is that, look, there's no need to change the rates. That is your lending rates as well as your deposit rates. That's the message in that. Now, when you keep it at the same level for too long a period of time, in my own understanding, you are indeed compromising the relevance of that rate. Because we get to a point now where nobody will care about what happens to the MPR. Perhaps only those who invest in treasury bills. Because the MPR is the basis of pricing of the treasury bills.
Okay.
So aside from investors in treasury bills, this rate will suddenly become irrelevant. And that is the real issue. In fact, that was why Nigeria migrated from the minimum discount rate that we knew it to be So now they're designating it as monetary policy rate.
Well, the committee will be meeting on the 22nd and 23rd. And going by the inflation trend, we have the inflation rate for May.
That's right.
At 9%. And of course, if you were here earlier, you heard Mr. Rwani predicting that inflation for June is likely going to drop to 8.4%. Okay. Going by that trend, what are your expectations in this coming meeting?
Well, I believe the committee pays more attention to expected inflation rather than the historical. So now, what do we expect of inflation? Now, we can say, yes, in the light of the trend since the beginning of the year, we expect a drop. But the trend is not enough to give you an idea of what will happen to inflation rate. You should be talking also about what is happening to liquidity within the economy in general, government expenditure, new investments, new inflows. What are all of these going to mean for liquidity in general terms? So if liquidity is expected to drop, then we can say that yes, expected inflation rate will also drop. So it is not enough to do a trajectory based on historical trend.
So do you think they are going to retain that rate at 12% at the next meeting?
Now, I don't expect them to retain it at 12%. I don't. Because if you look at what is happening now, question is, how much more do we expect of the government in terms of expenditure, which is a major driver of liquidity in the system? Then the other side is, what do we also expect in the private sector? So if we expect liquidity to grow, then the committee should be worried about expected inflation and therefore want to keep the MPR at 12%. So, but if I look at the success achieved so far in terms of inflation management, and of course the other side to it, expectations, I will expect them to drop it, even if it's by 50 basis points.
All right. And so what is your outlook for the second quarter?
Well,
or rather, the second part of the year.
Well, my outlook for the second half is that, yes, crude oil price is unlikely to go anywhere less than $85, $90 per barrel. And my reason for that, again, is not so much as because it's critical to Nigeria, but what is happening internationally. Because the reality is that the Middle East is still unsettled, and that will affect supply from that segment of the market. Of course, we still have Nigeria as an important contributor to that because of the sweetness of our crude. Okay? Now, if we look at all of these and many other factors, yes, the price of crude internationally will still remain in a range that falls within our budget projection. So if that is the case, then oil revenue is unlikely to be threatened during the second half year. Production, we might likely still get back to 2 million barrels per day, for the second half, and possibly still do export of between 1.85 to 1.9 million barrels per day, which will sustain inflows anyway. Now, the others, with respect to interest rates, I don't expect any major change in the trend we have had for the first half of the year. And of course, inflation. We might enjoy inflation going down, but I don't see it going to 8.4% that Bismarck mentioned.
Okay.
But maybe slightly less than 9%. And in the second half year, it will probably go up a little bit. But we might still be able to keep it at single digit for the rest of this year.
All right. Thank you very much, Dr. Adedipe. It's nice talking with you. Well, I've been speaking with Dr. Biodun Adedipe. He is a financial and management consultant, and we've been looking at the economy in the first half of the year. Well,